This will be a challenging session to hold because it will be right after lunch, and we should be responsible that none of you feels drowsy or dozes off, and it will be the panel's responsibility. But my responsibility is even bigger. None of the panelists should doze off. So, because my failure will be more public if that happens. So the panelists have been so sacrificing, they have skipped lunch for this reason. Thank you very much. I don't need to make any introductions because I am sure that you already have the agenda in front of you. We have some of the biggest and the brightest names in green finance here. And just to perimeter the discussion, we will focus on three main areas in the economy which green finance addresses. First is clean energy, second is clean transportation, and third is energy efficiency. Just to spotlight a little further, in clean energy we will speak about solar, wind, hydrogen, and energy storage. In transportation, clean transportation, we'll speak about EV purchase, EV charging infra, public transportation. And in energy efficiency, we'll speak about energy efficient equipment and process efficiency. Since the experience of the panelists may extend beyond this perimeter which I have proposed, I welcome them to bring in any point which they find is relevant from any adjacent area. Let me start with Dhanpal. Dhanpal, in this space of clean energy, clean transportation, and energy efficiency, how has been the journey of your fund, which is the number one or the most pioneering fund in this space? And what is the upshot of your travel so far?
Pavan, thank you, and thank you for having me here. It's great to be here with Anita and Pankaj. And thanks on a Friday afternoon post-lunch for listening to us. Hopefully we have some nuggets which you can take back. But a quick introduction on Everstone Capital, a business that we started. It's literally a 5-year-old startup. We started with the intention to catalyze private capital into the entire green economy in India. So we have two focus areas, two themes in which we invest in. One is energy transition, and the second is circular economy. We have invested and built 7 platforms across these two themes. 2 are in the renewable energy space. One is focused on utility scale renewable energy, a company called Ayana, which today has close to about 4 gigawatts of assets which are operational and under construction. The second is focused on the CNI space, Radiance, which has about 500 megawatts focused largely on solar solutions to corporate industrial customers. There are 2 in the electric mobility space, one focused on providing bus mobility, both intercity and intracity, and the second focused on corporate employee transportation. One in water, one in environmental services, and one in climate lending, but at the very granular level. So I believe in some ways our portfolio gives a representation of what the larger opportunity in India is across the entire green economy. The private capital market in India, if you look at it over the last 15 years, has grown 20x. From what was essentially a $5 billion annual investments that used to happen in India. Today, India attracts close to about $100 billion of global capital investing in private companies. And what you will see in India over the next 7 years is that the need for this capital has to grow multifold. The total capital that one has estimated is in the region of $2 to $2.5 trillion. both debt and equity, which means close to $500 billion of equity has to be raised over the next decade or so to be able to address fully the size of this market opportunity. We ourselves, as in early stage, I would say, investor in these sectors, are seeing the ability to potentially mobilize close to $5 billion over the next 10 years in the green economy.
And what is your experience in debt and equity? Which lending instrument or which financial instrument is favoring this sector?
I think first and foremost, because I think there are three very important criteria. One, that these are all real assets which need significant real investments, but which have a profile once they are ready and operational to generate long-term annuity income. Therefore, the need to use debt along with equity becomes essential for anyone who's looking to invest in this space. Second is that the execution risk associated with building these kind of assets as compared to any other type of infrastructure is relatively lower, especially if you're able to control certain elements around the sponsor, that who's developing these assets, and the scale at which you are building these assets to drive economies, to be able to provide unit cost economics which are attractive to customers. Finally, I believe that equity as an instrument is a risk instrument. Therefore, there will be certain sectors, and I believe earlier in the day there were sessions on green hydrogen and others, where you will possibly need to front-end the investments by actually putting in a lot more equity until these kind of businesses and business models are kind of proven, where debt, which is a lower risk capital, can come in and participate in a greater way. So we believe that for the $2.5 trillion to get fully expressed, there's a need for this $500 billion first to come in, start setting up these businesses, building these assets, creating the scale, creating the economics, creating the cash flows, when then friends like Pankaj will step in and start then providing the debt capital at scale.
Excellent illumination. Before I go to Pankaj, let me come to Anita. Anita, you have been in this space for long. What are the headwinds and the tailwinds are you seeing for investments, both coming domestically and coming from international spaces?
Thank you, Pavan, and thank you for inviting me to be part of this great panel. I have equity and debt on either side. And I'm actually focusing on the in-between, in a sense, of looking at technologies that accelerate solutions for addressing climate change. And I'm doing this through a fund that I've created with 3 other colleagues called Edhina, which, if you look back into your Sanskrit textbooks, derives from the word for earth in Sanskrit. Now, you might wonder, having worked for 22 years in the World Bank Group, both on the public and private sector side, and then for 6 years with CDPQ, Canada's second largest pension fund manager. Put it closer. Yeah, why is it that, I'm setting out on this journey with my colleagues? And the real reason is what Dhanpal mentioned. If you look globally, there is about, the last count was, that 90% of the global economy has committed to a net zero number, ranging anywhere between 2030 to 2070, with India being at 2070. So this whole space, which used to be a side pocket that people looked at in terms of, yes, green investment, that's something good to do, it's getting mainstreamed because there's this huge volume of capital that wants to come into this sector. There's this huge volume of corporate demand which has gone out publicly and said, this is what we are going to do. And also, if you look at the consumer demand, and I always focus on Gen Z, not only because my children belong to it, but also because the next purchasing power is really coming from Gen Z in anywhere between 5 to 10 years from now. So every survey that's been done on Gen Z, they have at least a 20-30% higher demand for sustainable products. And I think this is only going to grow. So from a global perspective, that's true. From an India perspective, it's even more true. In fact, the same survey that was done for India, the Gen Z in India, was 70% who are not only wanting green products and services, they are also willing to pay a little higher. And if you now see people as they buy a car, earlier the question was, which model and what not. Now you're talking about, are you buying an EV? Are you buying an old style car? And at least all the Gen Zs that I've been interacting with, it's a thing to be proud of and to show off. So the trend, definitely there. Coming in terms of India is a great country where scale is so palpable. So there is a lot of interest for investors and debt financiers to come into India to provide capital, but we really have to fight for it. And why is that? Because if you look at the United States, they've just introduced this Inflation Reduction Act, which is providing huge volumes of capital for these green sectors. You have Europe, because of the Russia-Ukraine war, who have decided that they really need to look at alternative energy at accelerated pace to what they were already doing, and they were one of the fastest regions in the world as far as energy transition goes. So where does that leave India? India, I think, has both, Everstone, where Dhanpal just spoke of, and Tata Cleantech, where Pankaj is, are great examples of the private sector in India, which are providing equity capital and debt capital. And I think we need at least 100 more of each of them to start moving the needle a little bit.
What about the climate protection fund? I'm forgetting the term.
Green Climate Fund. Yeah.
How much was the fund for, and how much did India grab from there?
Okay. So my numbers are a bit outdated, but Pavan is asking me this question because last time, out of 30 billion corpus that they'd raised, India had only got 300 million, and I'm lucky to be sitting next to the only two private sector fund and debt capital provider who've benefited from it. So the 300 million, I'm sure, is a higher number. However, it's still too small. And there are several reasons, and we can get into it. But I think the green financing and green projects is one area where the government of India can really enable, empower, and then move out of the way, and let the private sector, like these two gentlemen on either side, actually perform and deliver. And that's where I see that we can attract more capital from such funds into India.
Great. So coming to Pankaj. Pankaj, from the debt perspective, what is the overarching comment which you have about these three sectors? And I think I should visit one more subsector here, which is of climate mitigation, because you have spoken about climate mitigation and so has Dhanpal. But focusing on these sectors of clean energy, clean transformation, and energy efficiency. What is your comment?
So thank you, Pavan. Thank you, BlueCircle, for inviting me. I'm in such august company of Dhanpal and Anita. I'm already feeling overwhelmed. Allow me to just introduce Tata Cleantech Capital to you. So Tata Cleantech is a joint venture of Tata Capital and IFC Washington. Anita, who's sitting right next to me, is the chief architect of that joint venture, which came into being in 2012. 2013 is when we started our commercial operations, so we'll be completing 10 years in April of 2023. In the last 10 years, we have disbursed more than 23,000 crores to all clean technology sectors. And trust me, when we started, it was merely an experiment. Anita would attest to it. We never thought we'll come this far and we'll grow to the extent that we have. But the most remarkable thing about this journey hasn't been the investments that we have made. 23,000 crore number could have been bigger also. But I'm most proud to say that this journey has been excellent in terms of asset quality also. This busts the myth that, you know, when it comes to development finance or when it comes to green finance, it is riskier, right? So for a very long period, we had no NPAs. Even today, our NPA ratios would be the best in the industry. Our return on equity would be amongst the best in the industry. Our return on asset would be the best in the industry. So it goes on to say that what is good for environment is good for business too. And that is something that we are essentially extremely proud of. The other part is that from the outset, we were very clear that we will not just operate in already mainstream sectors. We will also support those sectors which need mainstreaming, which are yet nascent, which are yet emerging. Like Dhanpal said, there are sectors which are already mature for lending, and there are sectors where you need to allocate higher risk capital. So we start working with such setups, we start working with such entities so that we understand the nuances of that space early on. So when those markets are ripe, we are able to scale those with those organizations. To give you an example, the C&I sector, which is commercial and industrial consumer, and this sector has really blossomed, taken off in the last 8 to 10 years. When we started understanding this space, nobody was really keen to lend to this because unlike the utility scale projects where your off-taker was a government company, so-called sovereign risk, here the off-takers were corporates. Sometimes the PPAs were not as strong, PPAs were not as long-term. And today I'm proud to say we are the largest lender to the C&I space. So this is what we have attempted to do in the last 10 years or so. The other important dimension of our journey has been our relationship with the climate investors. So as Anita said, we were the first first private sector recipient of $100 million from Green Climate Fund. It is a blended finance facility. So we have pulled in our 100 million with 100 million from Green Climate Fund, and we are building $200 million solar rooftop portfolio. This is again first of its kind initiative in India. Similarly, we have built relationships with Asian Infrastructure Investment Bank. We have gotten sanction from JICA and many others. So the idea is to attract climate money from investors abroad and bring them to climate projects in India. The other part, and Anita very rightly said, we need to compete for global capital. $1.5 to $2 trillion that we need is huge sort of money, and so far only $70 billion has been invested. So there is so much more money that needs to be invested, and we need to fight for it. And for that, we'll need a sustainable and stable policy mechanism, the right kind of payment security mechanisms. So I think directionally we are right there, and over a period of time, I think we will get there. But given our journey thus far, and when I say our, I mean not just of Tata Cleantech, of the entire industry as such, I think it's been very positive, and I can only hope that it prospers further on from here.
Great. So you are turning the usual now dubious dictum that green doesn't bring you enough green. You are saying that it is profitable to stay in the green space. And also, of course, you're doing good and still doing well. So fantastic. And the other point which you mentioned, and I should also underscore that even today, 83% of the total finance for green space is coming from domestic sources. And really the international sources need to be tapped better. Couldn't agree with you more, Anita and Pankaj. Coming back to Dhanpal. Dhanpal, what has been the role of the government in terms of the regulatory support and any other facilitation which you get from the government while you operate in your sector?
Well, I think most importantly, one has to understand that private enterprise is all about creating value which is sustainable and which should not have any reliance, long-term at least, reliance on the crutches of other, I would say, artificial inputs to make businesses viable and profitable. And that's the kind of, we are a very, what I call as we are patient capital, we are very long-term capital. When we invest capital, we invest for at least 5 to 7 years, but with an intention of creating sustainable value which lasts at least 20 to 30 years, if not longer. Which means that any business that we invest in has to have an economic model which is not overly reliant on any form of subsidy or support or any such kind of thing. The second is that these sectors in which we are investing in are clearly, I would say, also driven by the fact that you need a right kind of a policy environment. And the policy backed by the right kind of regulatory frameworks coming in to make sure that we can do our business, I would say, a market environment, in a kind of an open market environment basis. What that means is that as long as you have the right policy and regulatory frameworks, you then need to basically do business in an open market construct where you can actually make money. So for us, the reason we got into this space 4 to 5 years ago was on the back of having seen the broader infrastructure space, gone through lots of challenges of execution, capital, outcomes, returns, etc., but with a very clear view that globally and within the global context, India has a very, very strong desire to move away from an energy security as well as, a clean energy kind of a situation. So we felt that as a result of that, we want to basically go long, invest in this sector. And I can only tell you in my 5 years of experience that we've now been operating this business, we've only found the government, one, a very, very eager listener, two, quite agile and relatively agile, I would say, compared to what you would typically expect governments to behave. And three, most importantly, quite supportive on actually making the change happen. I think the only difference between where India is and where the rest of the world is, and we have to recognize that, is that we cannot expect the government to be essentially doling out cash. I think India's first priority is to make sure that the billion people who are really at the bottom of the pyramid need to come up. And I think the government needs to do everything to make that happen. And I would be very supportive of capital going over there. But I believe that today, where the green economy is globally and even where it is in India, one can actually make money if it's done in the right way. And that's where we are most excited about really having government as a partner in our progress, but not really, giving us essentially capital or, what I keep saying, using them as a crutch to basically go out and build our business.
Yeah. So allow me to present a counterpoint and allow me to take Anita's help in this, because I will not be able to hold fort against you alone. So some people say that government should support this sector even materially, because benefits are environmental and social also, which are not fully captured by the private investor. First point. Second point is, they say that the oil industry is also hugely subsidized, which has a subsidy of nearly more than $5 trillion. And the securitizing of the transfer of oil from one nation to another is also not borne by the industry. So those are my points, and then I pass it on to Anita to handle the rest and also handle your repartee.
So I would say this comes, Dhanpal, from age over brains. And I've seen, I was lucky to have invested in the first megawatt of commercial solar. And I know this is back in 2008, 2009. And when we were talking about solar, it was really experimental. It was a new technology in emerging markets. It existed in other countries, but it had, we didn't even have 1 megawatt. So at that time, the government of Punjab was convinced enough to give a 19 rupee feed-in tariff. And even by feed-in tariff, what I mean is a tariff higher than maybe what was prevalent in the market, so as to encourage this sector. That 119 rupee tariff made all the difference to kickstart the industry. Having said that, I go back to the brains, that I completely agree with Dhanpal on one point, that those kind of supports and subsidies and all work in the early stages when an industry is taking off. However, if you really want to have scale, it has to be profitable. And there I agree very strongly with Pankaj in that if you want to scale and mainstream green financing, then you have to be supporting profitable businesses. And solar is a great example of that. So we were, sort of hopping along at 1 megawatt, 5 megawatts, and so on and so forth. But the real scale in solar came when the panel prices came down, when projects became actually profitable with reverse auction process. And the good thing the government did was to recognize that, okay, now is the time where we can shift from one method of bidding to another method. And that really brought in a lot of both competitive spirit as well as capital into the solar sector. We need to kind of repeat that in many other sectors, whether it's biogas, whether it's hydrogen, even to some extent or in areas like public transport and the transition to EV. There may be areas we really need to support. So in that respect, I'd say it depends on the stage of the industry.
I agree with you. And let me humbly put one more ribbon on that package of arguments before Dhanpal demolishes it. That even in the solar space, we increase the safeguard duties, and we increased them, the government increased the safeguard duties, and the duties went up so high that the progress of solar project execution itself stalled. Some people say that it might have been better not to increase those safeguard duties, but subsidize domestic manufacture so that you did not stall the pace of the projects. Dhanpal, it's over to you. Demolish, please.
Pavan, please. So my last point before I kind of take off, but I think fundamentally we have to understand how to separate the noise from the substance. Okay, and I think as humans, we generally tend to get, I would say, distracted by the noise a lot more than what the underlying substance is over here. The underlying substance is that India is very, very favorably poised to leapfrog the entire energy value chain. Our energy demand is going to double in the next 20 years. We will continue to grow faster than most other large, possibly all other large economies in the world. The Indian entrepreneurial ecosystem, I believe, is at its highest potential ever. The Indian professionals today are willing to, and I can bet you over here in this audience we have over here, I'm sure every individual sitting over here has a burning desire to be an entrepreneur and wants to basically tap global capital and local capital to make a difference. And I can tell you that that power of entrepreneurship, the power and the passion that entrepreneurship brings to making a change, driving positive outcomes, is far greater than all of these things that you talk about. And I have seen that. We have now been investing in India for the last 15, 16 years. And there's never been a smooth ride. I can guarantee you that if you have 2 years of good so-called situations, you will definitely find 1 or 2 years of bad situations. But how do you go through that cycle? How do you survive it? How do you cross it, learn from that and become better? I believe somewhere deep down, there is no other solution other than the best mind which makes it all work. So, I completely agree with the fact that you need the external catalyst, you need stimulus, you need incentives, you need support, you need all of that. But eventually the only way this business and this industry will grow is if the entrepreneur comes to the fore and makes it a reality.
You have the last word because you have done it. And I'm sure you have done it without any support from the government or let me say no material support in that sense. So you have the last word. Well done. And coming to, sorry.
Can I?
Okay, fine.
I'm sorry, I have another commitment, I have to leave, but it was great talking to all of you. Thank you.
Pankaj, does the industry expect any support from direct grants and investments, like, for example, basic research, loans or loan guarantees, or tax incentives as were given in 1916 for drilling of oil?
See, here I agree with what Dhanpal said earlier, and Anita also alluded to it. See, if you were to scale these incentives or these subsidies are not really sustainable. See, government has so many needs, right? And for a long period of time, if you stay dependent on that, it is really not possible for government to continue to support it. So I think where these instruments can be used really wisely is in those sectors where we are yet to achieve the maturity and we are yet to achieve scale, and the payment security mechanisms or the business models are yet evolving. Having some kind of innovative risk guarantee products, right, where you can actually leverage public money much better. So instead of a multilateral institution or bank giving vanilla loan to another institution or to a project, it is far better that that money is utilized in building those instruments which could go towards crowding in the private sector investments, right? So that's the best use of public money, and not really lending to projects and actually crowding out private investments, which unfortunately seems to be happening over a period of time. So I think that's something which is very important. So what will happen then is that you are creating the kind of ecosystem that the sector needs to bring it to a level where it can start attracting private capital. That's where public sector money needs to go in. And that may not be for a very long period, that may be there for next 3 or 4 years. And those sectors I can talk about even today. For instance, green hydrogen. It is not today viable on its own, because the cost of production of green hydrogen is almost twice or thrice as much as that of gray hydrogen. And we are a very cost sensitive market. So how do you bridge that gap? So it is possible that you do not have a humongous target for green hydrogen in the next 1 or 2 years. You have those early stage projects which basically demonstrate that it is possible for certain use cases for you to produce green hydrogen and sell it. And wherever there is a gap, you could come in with viable gap funding or some kind of blended finance facility. Or for instances where you were earlier talking about clean transportation, right? There, a lot of state transport undertakings, they need their whole fleets to convert to electric, right? But today, if you were to look at the financial strength of these STUs, no lender would want to fund the developers who have exposure to these STUs. So what kind of risk guarantee mechanism that you can bring in, where you say that if there is a default from STUs, we have these kind of mechanisms. So lenders then feel far more comfortable, lending to those projects which have even so-called weaker STUs as off-takers. So those kind of mechanisms can work, and eventually you would imagine that the financial health of the underlying entities increase, or you have intermediate structures like you have SECI in Solar Energy Corporation of India is a structure which basically is a bridge between DISCOMs and the developer. So developers know SECI. They do not underwrite the risk of discoms. And SECI deals with discoms. So I think that kind of a structure has worked really well. To give you an example, banks have funded roughly 50 gigawatt, right? 200,000 crores. And none of that is in NPA. That has become possible only because of structures like this, right? So I think public money needs to be used to invest in structures like these.
Excellent. Superb nuance. You are saying viability gap funding or crash funding. What Anita also said. Funding projects in the crash which would die without the support of the government or some other external agency. Great. So let me open up the discussion to the audience. If there are any questions, there are people who are sitting here who are funding hundreds and thousands of crores of green.
My question is actually more on climate adaptation. So because mitigation is one side of the story, but the other is adaptation and accelerating climate impacts that make a population vulnerable. So to what extent is the scope for private sector capital? You mentioned the Green Climate Fund in terms of financing adaptation projects.
This actually goes to the heart of what I'm trying to do through Edhina Capital. If you look at sectors like today, for example, you can't imagine a banking sector which doesn't have digital infrastructure. Every bank has a net banking service, right? If you look during COVID, health, education, and retail consumer business all became digitized. The two industries which are yet to really see that full-scale digitization is infrastructure and what I call built environment. Somebody may call it real estate, but in my mind, it's the built environment. These two sectors in the next 5 to 10 years are really going to be the ones that take advantage of digitization. Why? One, because there is scale. Today, when you say solar farm, it's not surprising it's a 500 megawatt solar farm. And you can't physically monitor such assets. You need technology. When you talk about, large waste recycling operations, again, it can't be just physical. You need to have some sort of a digital platform that enables transactions to take place. That being said, I think the most important aspect of bringing technology to infrastructure and generating data for infrastructure operations is that it actually is the best resilience for those assets. If you don't know what is going on, if you can't measure in real time, and if you cannot react in real time, you will not be able to adapt. So I actually argue with a lot of my old colleagues from World Bank and IFC and all, that adaptation is not just about building, higher wall for your hydro project or something like that. That's the old world adaptation. Really, if you look at what adaptation should be for infrastructure and the built environment, it has to be having real-time data, which means adopting technologies, and that's exactly the kind of companies that we're focusing on.
Great. Any other question? Yeah, there, please.
A very good afternoon, ma'am. So we are a innovative clean tech company, and we have patents with IIT in solar-based water recycling, and we have the cheapest energy storage in the world. We are storing thermal heat in molten salt. And my question to you is, firstly, how do you value innovation in clean tech, like patents? And secondly, what would you advise to an innovative patent holding company, a clean tech company? Thank you.
Okay, that's really a great question, because I think it touches on the argument that both Dhanpal and Pankaj made. So when we as Edhina, we are looking at clean tech and innovative companies, we are not going to finance them just because they are innovative. that solution has to be adoptable at scale and therefore profitable, and that's our motivation. Because anything which is not financially sustainable is not going to be sustainable.
Hi, I'm from the background of manufacturing of solar panels. So my question is to panelists is, because we are one of the oldest manufacturer since 2007, so it's almost 16 years, survived and growing. My question is to panelists is, do you find any feasibility for funding in manufacturing of the green equipments in India?
Yeah, that's a great question, and I would agree that more often than not, lenders have not really tried to invest into understanding the space as well as they should have. I would tend to agree with that. Also because unlike traditional project financing routine, here you're also dealing with demand and supply nuances, right? Because there are so many external factors. Having said that, it does not mean that it does not need deeper understanding. So I would say that those changes are happening as we speak, and even we've evaluated some projects in solar manufacturing. At least in solar manufacturing, we've already evaluated. But the fact remains, as a lender, see, we also have the duty to protect our stakeholder interests. So we need to just make sure that money that we are lending comes back to us. And for that, whatever assumptions you are making, those hold over a period of time. And I think it is still possible to meet your objective as well as ours, only if we sit together and try and understand how best we can mitigate that. So I think that's something which more mainstream lenders have avoided, also because of the baggage of the history. Sometimes some of the other projects haven't performed as well as they should have, given the international environment on demand and supply both. So I think this needs little better understanding, but it can still be achieved. Yeah.
And Pankaj, just as a supplementary, the projects which you have evaluated are ingots, silicon, panels, or cells. Which is the level?
So mostly what we've seen is cells onwards. So that's something that we've seen. Yeah.
Any other question? Last question. Yeah, there.
Firstly, a very good evening to everyone. My question is from Pankaj Sindwani, sir. Sir, the idea of green hydrogen has been floating around for many years. But like you said, is it going to be a granular part of the energy mix in the future? Or can it be cost effective in the future? There is every reason for doubt, because storing hydrogen is also a very volatile process, and a lot of problems are involved. So what is the time scale that you see that this technology will actually manifest the way it is expected to? Or if at all it does, is it going to be a granular part of the entire energy mix? Thank you, sir.
Great question. See, I am an eternal optimist. So, when we started funding solar, it used to cost 19 rupees a unit, right? Today, it is at about 2 rupees 50 paisa. And Anita was earlier referring to the term called grid parity. There is another term which has been coined by famous energy enthusiast Tony Seba. He calls it God parity, right? The God parity is where the cost of transmission, or the cost of generation, is lower than cost of transmission. So you never know. The technologies can disrupt in so many ways that it is indeed possible for you to achieve whatever you're dreaming of. Green hydrogen, in my own personal opinion, has every ingredient right so as to achieve the levels of green hydrogen pricing. The most important part within green hydrogen is the cost of renewable energy, and there are ways and means you can bring down the cost of renewable energy, specifically with storage. And we've worked with plants, and we understand there are plants which are already ready to start supplying 24/7 energy to some of these green hydrogen plants. And even today, you have use cases where green hydrogen is competitive vis-a-vis grey hydrogen. So it may not be competitive, for instance, in refinery or in fertilizer today, but it is competitive today for, say, some of these steel plants or some of the other process industries. And as the market scales, I am very confident that green hydrogen will get there.
And regarding your point of safety, that it is very unsafe, volatile, as Pankaj is an eternal optimist, I am an eternal anthropologist. So let me share with you what happened when the washing machine came. When the washing machine came, that time the sockets available for any electrical appliance were only for the bulb. So there was no switch or plug, etc. So people had to straight away plug the washing machine onto the bulb socket. When they used to do that, many a time ladies' hair used to get caught in the washing machine and burn. But as technology went forward, all those dangers were overcome. Similarly, in the space of refrigerators, which were a big lifeline during COVID for commerce, refrigerators in the previous pandemic in 1920s were not reliable at all. They used to explode all the time. So I'm sure as technology advances, we will overcome the danger or risk barriers which you speak of. On that note, thank you very much for a patient listening, and really appreciate your presence, and thank you very much, both of you panelists, and really good points.